So we now move on to our first panel of the day, discussing the importance of insurtech partnerships to unlocking innovation in Africa. Our moderator is Ashish Desai, insurance sector leader at Deloitte. So Ashish, the floor is yours.
Thank you very much, Ted, thank you for the introduction. Welcome to you all, and a special welcome to my panelists. And if I can ask you all to put your videos on, as well as unmute yourself, and I'll do an introduction. And as I quickly introduce you all, please just do a quick wave. I'd really appreciate that, so that the audience knows who you are. So welcome, Tim Hardcastle, CEO and founder of Instanda, Andre Symes, MD for Genasys International, Deepesh Thomas, head of digital Standard Bank Wealth, and Mugove Nyimo, head of digital at Absa Life. Welcome to you all, and hope you can hear me loud and clear. To the audience, perhaps a note to just use the chat bar to note down questions. I'll certainly do my best to give certain airtime to all of those questions. So perhaps let me just start off with a bit of context, to sort of kick off our discussion. I guess it's fairly well understood and socialized that the insurance sector has seen a significant level of disruption over the last decade or so, but in particularly over the last 3 to 4 years. And be that as a result of forces from outside the industry or such as industries converging into financial services to leverage their sort of deep customer relationships and access to diversified earnings, such as telcos and OEMs, or from within the sector, as insurers respond either defensively or offensively to rapidly changing consumer expectations and shareholder and regulatory pressures to increase penetration, to increase growth, and support financial inclusion. And what we've seen is that the response from the sector has typically been in the form of partnerships, either with tech providers for capabilities, or with businesses with strong consumer brands for access to consumers, or through incubation and acquisition of insurtechs. So with that as background and context, I'd like to turn to our panelists to explore the nature of partnerships from both the providers of innovative tech, as well as from the insurer's perspective. So perhaps Tim and Andre, I'll start off with you. And I'd like to ask you whether you can reflect on the sort of partnerships that you look for and why partnerships are so crucial from a provider's perspective. And maybe we can start off with you, Tim, and then I'll hand over to Andre.
So partnerships are something that every industry, I think, can point to as ways in which you can accelerate some of the business objectives that any company has. And why that happens is because it's true that no technology on the planet, for example, can cover all of the things that a company needs to do. It's also true that no company has all the capabilities it needs in-house to do the things it wants to achieve to keep its shareholders happy, and in particular, to give the kind of customers the experience they're looking for. So inevitably, I think when you look at insurance, with the pressures that you talk about, why wouldn't a company? I think my question back is almost, why wouldn't you partner? Because it's not possible for any single company to have all of the insight, the knowledge it needs. And particularly on the technology front, as a former CIO with a very big international insurer based in London, I manage technology teams. I fully understand how it works, and leveraging technology is very difficult when you're trying to keep the lights on in a corporate. So broadening out and embracing the partnership opportunity with many technology firms, I think is a great thing to do. I think almost companies should be looking to skill themselves up in how to partner really effectively. And that's almost as at the start there, rather than just saying, I need to partner, because there's so many things that get in the way, and we maybe talk about those later, but procurement processes, diligence processes, these are things that will stop the partnership happening. So I think almost start with, how do I partner more effectively? Because it's clear you won't have all the capabilities that you need to be successful. So there's a wealth of opportunity out there that you can immerse yourself in, but you've got to be able to partner, right? So we'll come back to that later, maybe in the discussion.
Thanks, Tim. Andre, your perspectives?
Yeah, I've got to echo quite a bit of what Tim has said there. It is the question these days is, not why should you partner, but how do you partner? I think, that through technology enablements in the last few years, partnerships have become easier. And, Tim would probably agree with the fact that, 10 years ago, when, you were a CIO, trying to bring technologies into different areas was quite challenging from a connectivity point of view. But as tech has changed, accessing different partners, integrating into new technology partners and distribution for your customers has become a lot easier. So I suppose it's things have started changing a bit. Also, 15, 20 years ago, we all used to be concerned about what information do we have, what do we own. Now it's about access to information. So things have changed as the technology landscape has caught up to the concepts of partners. But the one question she asked, what do we look for? And we always looked at ways to complement products to enhance customer experience as well as value. That's very important to us. It's always about what else can we add to customers to make their lives better.
Thanks, Andre. Thanks, Tim. I guess Mugove and Deepesh, it would be good to sort of hear the views from the incumbents. And I know partnerships are important to both of your organizations for driving innovation, business transformation, with the ultimate aim of driving growth. Perhaps what I'd like you to comment on is, what does a successful partnership look like? And what can incumbents expect from such partnerships with tech providers as a result? Perhaps, Mugove, if I can start off with you.
Yeah, thank you so much. Thank you so much, Ash. So I think I'll follow up on what both Tim and Andre spoke about. So from our side, we have to think about what are really some of the burning issues that we want to solve in terms of partnerships. So I was actually looking at one of your surveys, Ash, that talks about only 25% of the businesses that were surveyed actually exhibit any strong differences of how digital is central to what they do. And which means, to put it another way, most organizations are just largely looking at extending their digital capabilities, not really being digital in a way. So when we start thinking about what is it that from a partnership that we're looking at, we certainly want to start moving into that environment where, from what we offer to our customers, it's more than just your extension of, whether that's a buy and serve functionality across our platforms, but how does the whole, environment of digital capabilities become part of the full ecosystems? So in that approach, you start looking at, for example, from a customer perspective, data becomes quite driven in terms of what you're trying to do. Your strategy in terms of how you think about what you want to execute to your customers become quite top of mind. You talk about it in all your platforms. Leaders become a lot more accountable. And from an execution perspective, we even start thinking about cross-functional teams. So the way, if I want to play it back now, is that we want to move from environments where we are just offering normal capability right through to how the whole, how we show up to our customer from a digital perspective is right through all our ecosystems. And partnerships can certainly help us with that. And a successful one is when you're quite aligned in terms of whether that's your purpose-led mission or anything that you want to do around just how you want to show up to your customers. Then I think that the magic is right there. It's formula in that space.
Thanks, Mugove. I'm definitely going to pick up that issue of doing versus being and alignment of culture and approach with your tech provider, because I think that's an interesting topic to cover. Deepesh, your views, please.
Thanks, Ash. Yeah, so I think just echoing what everyone else is saying, the most important piece is effectively having a symbiotic relationship. So mutually beneficial partnerships. As we know, the market is getting saturated. Incumbents are struggling for profit and margin, as well as quick innovation and agility, whereas the insurtechs effectively are struggling for scale. So a good relationship or a good partnership comes together where the unique skills of both parties are brought together to actually create additional value, expand the size of the pie, and ideally bring value to the customer. So that's effectively really important from our side. So ideally, what you want to do is create the nimbleness of a startup within an incumbent environment and bring the crown jewels of the incumbent to the insurtech. At times, also, we know that insurtechs don't have the necessary IP, the operations in terms of claims handling, as well as license and capital. So those are the crown jewels that some of the incumbents can bring, and the agility, the technology, the disruptive way of working is something that the fintechs and the startups can bring to the table.
Great. So that's a lovely segue into, I guess, a second phase of this conversation, right? So if we could kind of turn our attention then for a second to some of the core capabilities that enable and support such innovation. And I think both sides have kind of reflected upon it. and be those the underlying tech capabilities, or even more fundamental than the tech is the cultural and organizational characteristics that actually need to persist for innovation to succeed. So perhaps I'll just give the mic back to Tim and Andre. Now, insurers typically face a dilemma. Okay, they are being pressurized to respond more quickly, more nimbly to customer needs, which are evolving daily, and frequently due to their interactions with other industries that are far ahead from a customer experience perspective. Yet the technology that insurers tend to work with, whether it's a recently implemented PaaS or over the last few years, or if it's a legacy system that's really not designed to be fast-moving, like what the customers expect from their provider. Well, I'd like both of you to maybe focus on, what are your sort of clients, meaning your partners, doing to address and find such a path where you can actually manage both of these competing pressures, the fast-moving front end and the slow, lethargic back end. Perhaps, Tim, if I can give the mic to you, and then back to Andre.
Well, thanks for that. I think that's a great observation on the real tension that exists in the industry. I mean, we work across 13, 14 countries, stretching from North America through to Japan, and what we're seeing is this tension between the incumbent. I think, as Deepesh said, it's the incumbent has the crown jewels, license to operate, capital, but it's held back by processes and systems that are probably designed from more than 20 years ago. And I've seen this up close. I've not just been a CIO in the insurance industry, I was a CIO in other industries, and many systems that have implemented, some of the biggest ones we know, and I won't mention the brand names, but they're designed for the back office. They're designed for the transaction processing. And yet what we're seeing today is a real shift in consumer preferences and patterns and digital engagement. And so those systems design, their ethos, their philosophy was a bygone era. So as you're sitting there as a board, as an incumbent, how do you address that? And one of the key questions, as we've already addressed, is partnership, but you've got to be able to leverage technology in the right way to capture and embrace this need for more personalization to the customer. And the dilemma they face is, what do I do? Do I replace my back office and spend another tens of millions of dollars on this thing? And if you speak to any of the analysts, and I've spoken to a lot of them, there is no ROI, right? I've seen it in other industries. I've seen it in insurance. There is no ROI on replacing your back office. You enter what's called the valley of death, which we can talk about, where you can't switch off your legacy, the scope gets reduced, you spend more money, and you end up in not a great place. So I think there's a real shift, and we're seeing this across our client base, of boards saying we need to get smarter in how we partner, how we leverage technology to drive that customer centricity approach. And we cannot just simply spend tens of millions of dollars on taking out that legacy. So let's embrace the new technologies and either layer them in or wrap them. There's different models you can use, but it's about using those capabilities that are out there, because the big system providers that existed for the last 20 years are not suitable for today's market.
So Tim, I'm certainly going to pick up on that issue of how do you actually work with technology when you've got a legacy system? But I'll come back to that. Andre, your views in the meantime?
Say connection is dropping off here. If I do for that.
Sure. So Andre, I am losing you. Can you hear me? Perhaps whilst, Andre, you are figuring out your Wi-Fi connectivity, I'll just give you a few moments. I'll come back to you. Maybe what I can do is then turn to both Mugove and Deepesh as incumbents, right? So we've spoken a little bit about speed and agility being sort of very important to, and they regularly crop up when we talk about innovation. And particularly in operational resilience, Tim's just mentioned that, and entering new customer segments for growth and new markets. But similarly, organizations that have a happy to fail and learn fast mentality typically are leading the innovation frontier. So Mugove and Deepesh, I'd probably like you guys to focus on and reflect on why you believe speed and agility and a fail fast, learn fast attitude or culture is an advantage for both of your firms. If we can share some perspectives. And Andre, I'm going to come back to you.
Thanks.
Mugove, do you want to go first?
Yeah, thank you so much, Ash. You know, speed and agility, it's one of those core issues that from a disruption perspective, you know, traditional channels are being disrupted. And we as traditional insurers, or even though within our banking ecosystems, we face new entrants or new competition from different environments, whether that's MNOs, whether that's your traditional you know, players in the background that are moving into the front office and becoming insurers as well. And even just anyone with the capability of lots of customers, lots of data, and the ability to offer something to an affinity group. Now, in that process of competition, and our customers are becoming very modern and they understand a lot more of what they want. But Tim alluded to that. So when you're in that environment, you have to be quite nimble. You have to be quick in terms of your solutions. You have to look at some of those products that have been designed 20, 25 years ago. It's not only just the systems, but the product themselves. We are still in environments where I'll bet there are new solutions, especially on the short-term side. But traditionally, life insurance is still as it was for many years ago. So we now have to start thinking about how do we come to speed and what do we need to do? Now, from a culture perspective, that becomes quite important because traditionally, you have all these waterfall type environments. When you start introducing partners, and at the same time, you have the same ambition of what you want to do from a customer perspective, you start realizing that even your own ecosystem, the agility, the speed, that want to do more for your customers also starts coming through, and you become a winner. You're able to introduce something, you do things small, you test, you repeat, you continue until you're able to do across. And I think what's great about distribution these days, there are so many channels. So you can test it across the different platforms until you have that magic formula that, you know, it just goes up. So speed and agility, very, very important now, especially if you're facing competition from your non-traditional partners. You have to really move and traditional competitors. So partnership also plays that role. I'll pause there.
Thank you, Mugove. Deepesh, if we can just continue with that question.
Yeah, thanks, Ash. I think McKinsey coined the term two-speed IT architecture, and I think that's quite vital to what Tim was speaking about in his previous session. Essentially, you know, incumbents have realized replacing core backend systems are not just timely, but it's costly as well, and the ROIs are diminishing over time. Software development life cycles are falling in terms of timelines, and customers mostly have expectations that have been built up by big tech firms like Amazon's and Facebook's, and even insurtech companies that have actually set the standard for experience and how rapidly people will respond to customers. So it's really, really important. I don't like using the words fail fast. I like using the words experiment and explore, because in everything you actually learn something. So whether you fail in terms of a product design or a development piece, you actually learn something from a customer perspective. So it's quite vital, in my opinion, to almost split the business into two areas. One is, you know, you have to keep the mothership going. You have to keep the lights on. Hundreds of thousands of customers are expecting their premiums to be paid, their claims to be paid out, etc., and service to be rendered. But at the same time, you have to future-proof yourself and create a new space in the market for yourself, and most likely with partners, because we just don't have appetite to invest heavily into fixed costs from an IT perspective. We don't have appetite to spend months upon months testing or getting something to market so we can test with customers. So ideally, what you want to do is create a new environment that effectively allows you to play in a safe area and to experiment with customers. So break it down into how many experiments do you do in a year? What exactly are those experiments? What's the outcome of those experiments? And if successful, how do you expand those experiments going forward, so that ultimately you can extract value and create the next cash cow for your business? So partnerships are critical. Part of that is to what Mugove said, the cultural aspect. It must be, from an executive level, made clear that experimentation is okay. I don't like using the word fail again, but it's okay to fail sometimes and to learn from what you've done. And you got to enable the processes. So you got to remove all the red tape that comes associated with onboarding new partners and sharing of IP and data across multiple entities. Gone are the days where you keep everything in-house and don't share any kind of IP externally. Now competitors are starting to collaborate ultimately to expand the size of the pie and to extract more value and ultimately deliver value to the customers.
Thanks, Deepesh. I've made a few notes of topics I want to come back to. Andre, just to close out on your sort of perspectives, I asked the question earlier on about the pressures that insurers face with a rapidly changing front-end expectation from customers and a slow-moving back-end. Just give us some thoughts on that. How do you help your customers?
Look, I think that how we help them has been unpacked very nicely by Tim and the rest of the panelists already. Is that you have to have an area where you can experiment. Trying to do a business case to launch a new greenfield product on existing core just doesn't make any more sense. So we're probably going to start seeing a bigger move towards an ecosystem approach to the insurance sector rather than the big monolithics. And I think that the rest of the panelists has kind of alluded to that already. But what really is a challenge, we've got the technology, we can do this. And I suppose, everybody is working towards a more lean, agile approach of delivery too. So this concept of experimenting, as Deepesh puts it, or fail fast, as we put it, is becoming more accepted. But ultimately, I think, Mugave hit the nail on the head. I think there's still potentially some cultural challenges around this, is that how do we get corporates to accept failure as progress? And I think ultimately that's where we're sitting at the problem now. We don't really have a legacy technology issue anymore. We've got good tech. I think we're still sitting with potentially a legacy thinking challenge when it comes to true innovation.
Great. Thanks, Andre. Let me sort of pick up on that. A couple of sort of themes are coming together. Some of you have referenced the sort of cultural and leadership challenges and changes that are required all the way from executives. Perhaps Mugove, I'd like to maybe you to comment on this. I actually think, my view is that actually that change happens right from the board, the investors in those businesses, and the non-execs. So perhaps some comments on you as to how do you get what typically can be a board and a leadership that is institutionalized in a particular way of thinking. As you've mentioned, waterfall. What are your sort of 2 or 3 tips for other incumbents that are on this audience or in the audience, where you'd sort of recommend, fundamentally, what would you do to get the switch on from thinking differently? So perhaps just very, very quickly from your perspective on that issue.
Yeah, absolutely. Yeah, thanks for that, Ash. If you really think about, especially the bigger the ecosystems are, you've got exco teams, you've got boards amongst other boards, and you have different committees that you're looking at. And for you to really get the digital agenda or the concepts of trying to do things differently, it has to start right from the top. So the first component is around just the visibility of the digital agenda or the partnership agenda. It shouldn't be just at exco level or your cross-functional teams. You have to show and tell at a board level. You have to think about at times, what's the agenda? Show and tell, get that opinion in terms of what you need to do. It's the right platform for you to get those ambassadors right there. So I think the first one would be the cultural issue of partnership or a digital aspect should be right on the agenda across everybody. The second component I would say is the leaders themselves need to create environments and where people feel safe. Now, by safe, we can talk a lot as executives or as businesses that, and I like the way Deepesh put it in terms of experimentation. But if there's still that culture of people feeling that is failure, it becomes quite difficult to drive that particular culture. So you've got to create that from safe environment. And one of those things is to really talk about the experiments that you're doing, have some honest conversations about that. We tried 100 things, 10 were able to stick, and then we ended up with 3 or 4. And that concept is quite interesting because we do it from other sales environments. We're quite happy to talk about success, say, in telephony business of 10%, 12% strike rate, meaning that out of the 100 people that you called, you only managed to get 10 or 12 to buy. It should be the same around some of the experimentation processes and what you need to do. And I think the third one is just also to reward people to do different things as opposed to their day job. That's also quite important because people need to do different things, especially in the tech environments. If they're just not always fixing the clunky legacy systems that they also feel that they can do other things, and that becomes something that they're rewarded to. That also really gives some environment. So I think those are my comments, actually. I mean, the culture around the visibility at a board level, just allowing a safe space for people to experiment. And the third one is just also from an individual perspective, rewarding people to do things differently.
Thanks, Mugove. Tim, a question for you, right? So as a entrepreneur, as a founder of an insurance capability or emerging technology, perhaps when you engage with customers or your partners, I guess a couple of things I want to comment on, and maybe you can reflect on some of them. You tend to engage with the CIOs and the CTOs, or possibly a level below that, and you probably don't have the ability to influence that board direction and board conversation. So, what would typically happen is, you, as an entrepreneur, it is entirely in your DNA to take chances, try a few things out, have a longer term view. Whereas as you're engaging with stakeholders that I've just mentioned, of regulated entities, which both banks and insurers are, you've got a slightly different mindset, right? So I'd like to kind of just get a sense, what are your thoughts for, upcoming sort of emerging technology, entrepreneurs, what's your learnings? And secondly, incentivization, right? And I'm talking about ROI, because I think you started the conversation on ROI. And I wouldn't mind getting Andre's views on this. Yes, you're right. I mean, there's, gone are the days where you take 36 months to figure out what you need, another 54 months to identify the right technology, and then another 72 months to actually get the return, right? I mean, I'm exaggerating.
Not really. I don't think you are.
How do you believe you, as a emerging technology, as a innovator, how do you incentivize your partners, all the way from the board down to the people you're engaging with, to have a go? Just give it a try. Yeah, thanks.
Okay, so let me pick up the first part of the question. Just interesting observation. I think both Deepesh and Mugove talked about it. The executives of the vast majority of the insurance incumbents that we're talking to and startups are so much more tuned into the need for agility and speed, right? So actually our engagements typically do come through CEOs or COOs or heads of business units, and sometimes quite often we actually upset the existing IT community because they haven't heard about it, and it's brought in by the executives. So I think that's a very positive thing, because the executives leading from the front, anyway, that's an aside. Just talking to your point about the learnings and how do we marry up this cultural divide, if you like, between entrepreneurs that are prepared to take, when I was building the company with my co-founder, our houses were on the line, we were selling all of our assets, it was one of those real, I'm not looking for any sob story, but it was a high profile, high risk, high stakes scenario. And you can't expect, middle or senior executives that have built their careers in a corporate environment to suddenly throw all that out the window and just, and we don't ask that. You can never, it's just a complete anathema. But what you have got that sits right in the middle and is a common language and is a common currency, if you like, is ROI. So when we go into a lot of the clients that we talk to, we're talking about a 3-month ROI, right? Where you can say, let's go in, let's work together. I like the experimentation, Deepesh, but we use the phrase take a bet, because it's like, you want to put something in, you're going to have a little bit of a gamble. But if we can put the metrics around it, put together the agile process that we work to, then we're confident, we know we can generate an ROI. And when you've got a track record of doing that in 40, 50 times, then you can come to the corporate and say, this really is not a risk, right? We can wrap around the project, we can give it that ROI. And that's a common language. That's something that everybody can get around. No one's going to be embarrassed. No one's going to be feeling as though they've failed. Even if that bet doesn't maybe come out the way that they think, you've still got this mantra, you're driving through a 3-month ROI. So that's the way that I would encourage all entrepreneurs that are founding businesses to think about, is where is the value that you can bring through partnership or whatever to the market you're addressing, and show that value at speed, right? And then you can build from there. If you've got that, you'll get the market traction, you'll get the engagement, and it doesn't matter whether it's a CIO or a CEO. No one's going to turn around and say, "Oh no, I don't want a 3-month ROI," right? The second part, did you want to put that to Andre or me? I don't mind. I relax.
Yeah, we haven't heard from Andre for a bit. Let's try and get Andre to reflect on that as well. Thanks, Tim.
Yeah, look, absolutely. You have to be able to drive down the time to test. And, it's not just about reducing it down to a 3-month time frame to allow your customers to experiment or do an ROI. You can take it a step further. And, what we try and do is we try and give our customers tool sets as well as options for them to actually go do self-experimentation. Because if they can experiment within their already sunk costs, within their IT departments, or particularly in their business departments, to try out new ideas themselves, you drive down that cost on the ROI even more. And we've seen this on a few occasions, where some of the customers that we deal with have come to us and said, we've tried a product, we're ready to launch it, let's turn it on. We think we're going to get uptake on this. And that's the first year about it. And that's kind of, I think, how technology can enable that, is if you can give people the tooling that they can do self-experimentation, it's even better.
Agreed. Perhaps Deepesh, thanks, Andre. Maybe I'll just turn attention in the last few minutes before we get the Q&A. Deepesh, just a comment you made earlier on around potentially ring fencing new tech in a separate part of the organization. Oftentimes, and I guess different insurers and incumbents will be doing different things. Some try and bring it into the core of their being, and some sort of keep it outside and ring fence. Obviously, there's pros and cons of both. Perhaps you can just comment a little bit about your experience in sort of ring fencing, identifying technology that you want to use within your group, and how do you sort of manage the decision to bring it into the core versus keeping it on the side and as Andre said, experimenting and giving it a bit of a go.
Exactly. I just want to clarify by ring fencing. Sorry. By ring fencing, I mean. Can you guys hear me?
I can hear you.
Okay, sorry. Ring fencing, I mean more on technology ring fencing, not necessarily around people ring fencing itself. What we've seen previously in some of my previous
There's a bit of an echo. Tim, could you put yourself on mute? Maybe it's, yeah, we'll go on mute. Thanks, Deepesh. Back to you.
Is that better? Okay. So let me just clarify, by ring fencing, I don't mean taking people, putting them in a different building completely outside of the mothership. What we find with that is you kind of get resistance from the main organization. And it's really, really important to always have an umbilical cord back into the company because you have to leverage those crown jewels. So when I mean ring fencing, it's more around initiative ring fencing as well as technology ring fencing, and possibly even process ring fencing and governance ring fencing. So some of the blockers need to be ring fenced. Culture should never be ring fenced, in my belief, and people should never be ring fenced, because you always have that kind of resistance, and you always need to leverage the benefits of the mothership. So success criteria for ring fencing is, again, having specific outcomes defined, technology that's flexible and nimble, and partnerships that will allow you to experiment and get to market very quickly. So some of the challenges we faced is, once you've done that experiment, how do you bring it back into the main company with the legacy systems that you've got? And that's something, unfortunately, we're still trying to figure out, because a lot of the legacy systems in these large incumbents have been built over the past 50, 60 years, and they're not API ready. Integration patterns are still very, very outdated. Systems are all manually reconciled. They don't really talk to each other, and now we're asking them to talk to a third party outside of the main area. So for me, that's going to be the next challenge in terms of how partnerships need to work, and how this ring fencing can actually work to create mutual benefit.
Thanks, Deepesh. It's a good segue into one of the questions I've got from the audience. But Tim, I just want to ask you another question, and perhaps you as well, Andre. As entrepreneurs that are innovating all the time with technology, you genuinely have and generally have a longer-term plan around the future evolution of your technology. And that might address all the potential needs that a customer or a partner has. How do you marry that sort of vision that you have, and what are the sorts of reactions you typically get from your clients who actually want to know that you can actually do everything today? So just perhaps a little bit more on that around sort of time horizons. How do you sort of, as entrepreneurs, for the other entrepreneurs on this in this audience, what's your tips and what's your thoughts? Tim, and then Andre.
Well, some of the challenge I think any technology startup faces is ensuring that the technology you build from a design perspective, architecturally, allows you to stay in touch and, as you say, start to take some moves forward to anticipate where markets will move. And if you look at some of the older systems that exist today, they haven't been designed for that, because they're not designed on many of the cloud native platforms like ourselves, where there's one code base, right, which serves all of the clients globally. We may be regionalized with our infrastructure, but what that means is that our platform and our technology is never going to be out of date, because we can make changes to our platform, and we do every week, right? So we're constantly adding features and functionality and enhancements to our platform, because it's one cloud native multi-tenanted environment, which means all of the companies that are working with us can get the benefit of this progress. And so we make a whole series of tactical improvements, but that's a design concept. You can't take, if you go back and have a look at some of the big back office platforms today, I mean, Deepesh had some extreme examples of, the 50-year-old ones, but even the ones 20-year-old, they haven't been designed from a cloud multi-tenanted perspective. They are not single code base. They are code base as bespoke for individual companies, and they cannot keep up with the pace of change, because they're having to make implementation and upgrades. And I've been through this myself with some even bigger names than the ones you might recognize in insurance. It's a painful process. It's like another re-implementation, whereas we're offering our clients the latest version all day, every week. Now, if I look further into the future, it's important that we take a position, because we can't do everything. We've set our position out on the basis that, why would we go into CRM when there's things like Salesforce, there's Microsoft Dynamics, there's HubSpot, there's a whole world of CRM platforms that are fantastic, and they do what they do really well. So our job is to be open architecturally to allow us to interact with these different platforms that are out there, and whether it's an AI platform, whether it's machine learning, etc. We've got to be open. So we have to, again, that's a design principle that, again, as Deepesh said, would not have been built into older systems. So we've met that challenge in two ways. One, by going multi-tenant and cloud native and a single code base, and two, by being open architecturally, so that we can actually embrace capabilities from other technology arenas. And that allows us to then jump our way forward into some really amazing things.
Thanks, Tim. Andre, just some reflections from you.
Yeah, look, again, Tim seems to be hitting the nail on the head. Being cloud-based, being multi-tenanted is vitally important to the future. And I think, again, one of the main things is, and we've seen it now in the last 12 months more than we have in the last decade, is that we're in a very unpredictable situation. There's new risks emerging every day. So what you have to design into your software from a fundamental point of view is that you can't predict the future. You can't design for the future. So you have to have design principles, as Tim alluded to, things like API ecosystems, so that you can cater for the unforeseen. No one knows what the new risks are going to be in 3 or 4 years from now. But if you have the right design principles in place, at least you can accommodate new technologies when those come out to address those particular challenges. So I think the main thing is to always make sure that you are not becoming the new legacy by remaining open.
Yeah. Thanks, Andre. Great segue into the question. Ibrahim Kamei from Blue Wave asked the question, and I want to direct this to Deepesh. And the question is, do you think approaching partnerships through leveraging on APIs really provide the right level of engagement? And the second question is around that is, are APIs really ripe in the South African market for mass market distribution of insurance products? Just some views, Deepesh.
Ash, I think it depends on the type of APIs you're speaking about. If you're talking about core banking APIs, custom identification APIs, then most likely not. But if you're talking about insurance policy APIs, quoting APIs, then yes, definitely. So there's a lot of work that's needed. I mean, we've seen that open insurance and open banking still has a long way to go in South Africa and Africa. And most of that is because the core systems, maybe not 50 years old, but even 20-year-old and 10-year-old systems aren't built with APIs. And if they are built with APIs, it's most likely internal APIs sitting on on-premise firewalls. So they're not really built on new tech like MuleSoft or Azure or AWS that need to be exposed externally. So it's a lot of work that's needed, but luckily with COVID-19, we're seeing a lot more adoption of cloud. And once you've got cloud, then, inherently cloud is about calling out third-party APIs externally. So I believe APIs in combination with software as a service is going to be the next wave, but still a lot of work that's needed from a core bank or core insurance perspective to enable the full benefits of the partnerships. Again, my view is ring-fence technology, focus on specific initiatives, release new markets, and as Tim has said, place a few bets, and once you start to win, then over time you'll get the persuasion in the organization to actually start exposing those APIs that are all internal and locked behind firewalls to these partners. So it's all about getting some runs on the board in terms of partnerships.
Thanks, Deepesh, and we've sadly run out of time, but I really want to thank you, Tim, Andre, Deepesh, and Mugove. But perhaps before I hand back to Ted, perhaps it's probably apt to just reflect on the old African proverb that if you want to go fast, go alone, and if you want to go far, go together. And perhaps that's a good way of thinking about partnerships in the African context. Over to you, Ted. Thanks, panel.
Thank you very much, Ashish. Really excellent panel discussion there. Very, very interesting. Really sticks with me with that idea. Don't become the next legacy. I completely agree with that one, though you can't always plan for everything in the future.